First, it was the subprime home loans, mortgages. I remember hearing George Bush talk about it too. Remember when he was in office? We, you know, he talked about the American dream, and everyone has the right in America to shoot for that American dream. So they allowed the more poor people or the poorer people to, remember those days everyone's approved? Just fudge your number of your income on the line and you're good to go. And not only did they put them in those loans, they gave those people especially the adjustable rate mortgages. So that in a few years, your little teaser rate, as they called it, balloons. And all of a sudden, you owe $300 or $400 more dollars per month on your mortgage. Like that. Uh-oh. We had a big problem, didn't we, with housing? So, first it was the subprime mortgages. Now I wonder, are we about to see subprime auto loans? The mortgage big brother? Because you have to understand something. They say and again, this is of course on average, but I'm talking about way above average. When you hear this, you'll understand. The most expensive thing a human being will buy in their life, especially in the Western world, us Americans, but again, this goes across the globe, is a house. Okay? Obvious. Yep, makes sense. The second most expensive thing a person will buy is the car. So this ain't going to be no little issue if this becomes an issue, and I think it is absolutely becoming an issue, because when a company that deals in such things doesn't want to release its numbers because of accounting problems, quote, that means, oh crap, it's worse than we expect. Again, zero hedge. We first introduced readers to Scopus Financial, a company which we dubbed the new king of deep subprime. This is why I love zero hedge. Not only do they talk about stuff, they must have a system in place so that anytime they talk about something else, he search for the word subprime, he probably has a list of stuff, or they have a list of stuff that pops up. Oh yeah, we talked about that. And then they put a link to it. Yep, see, we talked about that, a year and a half ago, whatever. It's right there. Zero hedge for the win. So when we first introduced readers to Scopus Financial, a company which we dubbed the new king of deep subprime, they gave it the nickname back then, which we have long expected to become ground zero for the upcoming subprime auto crisis, and which is run by Santander Consumer USA veterans last April. This is what we said about the company that has become increasingly more prominent. Quote, Scopus Financial, a 4-year-old auto finance company based in Irving, Texas, sold a $149 million bond deal consisting of car loans made to borrowers considered so subprime, you might call them, we don't know, subprime, end quote. As Bloomberg noted, hang on a second. Thought I heard the faint echo of cats tearing up some blinds in my right ear. And I went ahead and raised the window up so that they can take a peek out rather than tear the blinds up. So as Bloomberg noted at the time, the details from the prospectus showed a whopping 20%, that's 1 out of 5, loans bundled into the bond deal were made to borrowers with a credit score, ranging from 351 to 500. I didn't even know there were such credit scores you could get to. I had a foreclosure. It's still on the books. And I've got 600 and something, a little low, but above 600 credit score. It's still on the books. I've had to send Bank of America a letter. Listen, we settled last year, at the end of last year, October to be exact. You gave me 3 months to be out of the house. I gave you the keys. I accepted your payment settlement. Therefore, my credit score should show not a delinquent mortgage. It should show that off, on my record, but gone. Not like it's still, occurring. So I had to send them a nice little letter. Listen, Bank of America, I noticed on my credit score, it shows that this is a delinquent account. Not that it's been written off, charged off, settled, etc. I understand it needs to be there, but it's as if I still owe this money. And we have a settlement. I've signed the agreement, as you're well aware of, and here's the agreement number. Here's the number of lawsuit number, settlement number, whatever the hell it was. I need you to look into this because my credit score is being affected. So if some schmuck like me, who has a foreclosure under his belt, has over 600 credit score, I think it's around 610 to be honest with you. And again, this is with the messed up Bank of America thing still on there. That needs to be fixed. I might be at 650, 670. I could be 650, 670, son. Not that I give a crap. How the hell do you have a 351 credit score? What does that even mean? What that means to me, anything 500 or less, for God's sakes, tells me you are never, ever, 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 ever allowed to get a loan for anything. That's what that tells me. Except we got 20% of those babies on our books, at least, bundled into these bond deals. So the bottom 6% of U.S. borrowers, it says, according to FICO. As a reminder, the cutoff for prime borrowers is generally considered to be a credit score of around 620. I'm almost there. Oh boy, I can't wait. Yeah, right. More than 14% of the loans in the Scopos deal were made to borrowers with no score at all. This means the Scopos deal has a slightly higher percentage of no-score borrowers than the recent subprime auto securitization recently sold by Santander Consumer, which garnered plenty of attention for its dive into deep subprime territory. In its own words, Scopos said that it was, quote, leveraging our sophisticated, patented iLender technology and visionary management team. Scopos provides a streamlined process for franchise dealers to finance customers with low credit scores. We decided to look at the visionary management team, and we found the following profiles which seem to indicate that at least for some industry veterans, Santander Consumer isn't quite subprime-y enough. Note that there's a countrywide link in there as well for good measure. Mark Gallist, Countrywide Financial. Managing Director. We concluded as follows. We suspect we'll be talking more about Scopos in the not-so-distant future. But for now, just note that the amount of paper floating around out there, backed by the worst of the worst in terms of auto loans to underqualified borrowers, just went up by another $150 million, that is, with the market's biggest subprime issuer, Santander Consumer, increasingly at home in the deep subprime space. Just about the last thing anyone needs is more supply from an entity run by former Santander Consumer execs, one of which is from freaking dun 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 Countrywide. Sure enough, in the coming months, there was a lot to come on Scopos 1st in November in there, and he links it. Subprime Auto goes full retard. Lender sells $154 million ABS deal backed by loans to borrowers with no credit. Followed soon after by Subprime Auto delinquencies soar past crisis levels, now highest in 20 years. Quick. Act surprised. As I'm reading this whole thing, and of course reading the stuff I read every day, keeping myself well informed every day, and then regurgitating it to you to keep you just as informed, I completely accept and understand when Lindsey Williams said, When they pull the trigger on this economy worldwide, when they pull that trigger, if you have anything written on a piece of paper, it's not going to be worth the paper it's written on. You must have hard assets. These are some 90% silver. I normally don't collect this, but I had a few of these. Just throw that out there. Little shout out. Subscriber sent me a silver coin in the mail. He said, "Hey man, I really appreciate what you do. P.S. I like your little parodies too. It's kind of funny. Appreciate that." But he said, can I send you a ounce of silver or something, just for appreciation? I'm like, I'm not gonna I'll never turn down any silver. People used to want to send me money and stuff, like, hey, can I send you $20 every now and then? I'm like, man, I'll be honest, I'd rather you buy you an ounce of silver or something, buy yourself something. But some people are like, no, I'm good. I want to give you something. Well, by God, sure. I'm not going to fight you on that one. That's for sure. So I got to give a little shout out. Appreciate that. Send them an email thanking them as well. It's kind. I'm not telling everyone all of a sudden, oh, I want to do that too. No, you got $20, buy yourself a coin for yourself. But while we had covered Scopos, the king of deep subprime, extensively, and were long anticipating the visionary lender to be the canary in the coal mine, another company was also long in our sights, the king of all subprime auto loans, and that's Santander Consumer USA. Here is the boilerplate from the company's own description. Santander Consumer USA Holdings, Inc., New York Stock Exchange symbol SC, is a full-service, technology-driven consumer finance company based on vehicle finance, third-party servicing, and delivering superior service to our more than 2.7 million customers across the full credit spectrum. The company, which began originating retail installment contracts in 1997, has a managed assets portfolio of more than $53 billion as of March 31st, 2016, and is headquartered in Dallas. Then recall from our March 2015 profile from Zero Hedge, Santander is the largest subprime auto lender in the country, with more than $15 billion in outstanding loans to underqualified buyers. Not surprisingly, the company also dominates the subprime auto ABS space, accounting for a disproportionate share of year-to-date issuance. We know that Santander's first deal of 2015 carried on an average FICO of 595, an average APR of 16.20%. Ugh! So you're charging these poor people who can... and an average term of 70 months. Could you imagine paying 16.2, anywhere in the neighborhood, 16% interest on a freaking car loan? It's 1.3 trillion in debt. All these foreclosed homes still sitting on the market. Many haven't even, they dare not even list them. Auto loans, delinquencies. I mean, let me just do a quick search, for God's sakes. Delinquent loan chart. I don't know. May 18th, 2016. Federal Reserve. I don't know if I want to trust that source. Real estate loans, residential, commercial, farmland, delinquency rates. 2016, 2015, 2014, 2009, I see that. 2009, 2008. See, going back, to give you an idea, going back to like 2002, 3, 4, 5, the delinquency rate, and I'm just looking at residential, 1.9, 1.8%, I guess, 1.5, 1.3, 1.5, Then we roll into 2007, 2008, 2.3%, 2.7%, 3%, 4%, 5%, 6%. Oh, 2008, fourth quarter, 6.66. 2009, 7.8%. Also in 2009, 8%, 9%, 10.5%. 2010 rolls around 11.2%, 11%, 10%, 10%, 10% across the board for the next 2 years. 2012, 10%. 2013, 9%. 14, 7%. 15, 5, and 6%. And we only have quarter one so far, and it's almost at 5%. So if we're only at 5%, it's okay, it's coming down now. Remember what I said, what it was in 2003, 4, 5. 1.3%, 1.4%. So this is still a huge increase in delinquencies. That's also residential real estate loans. Consumer loans, on the other hand, credit cards, we're at 2.15% of on credit cards, with back in 2009, 10, 11, 5%, 6%. The good old days, is there even such a thing? I'm not even seeing good old days. I'm going back to 2000, and it's 4.5%. So it seems like credit cards themselves have actually come down with the peak in 2009, and even way before that, 1996, 1995, we're in 4%. I just had to take a quick look at that. That's the St. Louis Fed one there, Investopia. What does Investopia say? Investopia, what are you doing here? Investopia, step in office. Why? Because you're freaking fired, that's why. I didn't click on here to find the definition of delinquency rate. What is delinquency rate? A delinquency rate is the percent. Now you're definitely fired. I'm going back to my article. But keep something in mind. Even if the credit card delinquency rate appears, according to the Fed, to be lower than normal, or how it's been the last several years, what is more money? Someone buying new cars for $40,000 and $50,000, $60,000, or someone's credit card, which might be $5,000, $10,000, or $15,000. Point being, the car loans are the ones that hurt the worst, and they are not anywhere near back to normal levels. And from the looks of it, it might be about to get a bit worse. So it says, we went on to detail how Santander was set to float a new subprime deal that looked even worse, called Drive 2015A. The securitization sold out in a matter of hours, with the highest rated tranche yielding just 1%, proving beyond a shadow of a doubt that artificially suppressed interest rates are driving investors to take bigger and bigger risks as they desperately search for any semblance of yield. Taking advantage of the unprecedented demand for repackaged yielding subprime loans, Santander simply wanted the loans off its balance sheet so it can make yet more bad loans, which it will also move off its balance sheet in order to make still more, and on and on. This is precisely the mentality that existed when the mortgage securitization machine was set on overdrive, and it represented a dangerous turn of events at a time when even the market for highly rated corporate paper is facing a liquidity crisis. However, since investor demand was there was little to prompt a slowdown in the process, and as such, Santander was happily churning more subprime issuance. Having followed these two narratives for nearly 2 years, the subprime giant Santander Consumer and the overeager Scopus, which we were curious which of the two would first signal the bursting of the auto subprime bubble, with our money on the latter. We were wrong, and as one look at the charts of Santander Consumer, or SC, reveals, the largest U.S. subprime lender appears to have been the new normal, new century. Why did the stock crash? The reason is that earlier today, Santander Consumer announced that the company will delay its quarter two results due to discuss with its current and previous accounting, quote, certain accounting matters primarily related to the company's discount accretion and credit loss allowance methodologies, and to wit, Santander Consumer USA Holdings announced today that it will delay the release of its Quarter 2 2016 financial results, previously scheduled for Wednesday, July 27th, because the company's financial statements for the quarter have not been completed. The company is in discussions with its current and previous independent accountants regarding certain accounting matters primarily related to the company's discount, accretion, and credit loss allowance methodologies. The resolution of these matters may impact prior period financial statements and the timing of the filing of the company's quarterly report on Form 10-Q for the quarter ending on June 30th, 2016. So in other words, the previous financial statements, due to us talking to our old accountants and our new accountants and determining what was discount, accretion, and credit loss allowance methodologies. What methodologies did accountant 1 use? What methodologies accountant 2 use? When we figure out what is what, we have a feeling it might actually impact previous periods reporting. This is no different, my friends, than the government coming out today and telling you we had a great jobless number come out today, markets rally. Jobless numbers were fantastic. They were above what we thought they'd be by 2%. Oh, markets rally. Oh, green. Green, green, green. And then a month or two goes by. Time for those jobless numbers. Wait a minute. Revision. On the latest ones, you're just about to release them. No, we're going to release those. But we're going to release those today. But we have a revision for last month. You know, the one we said that was great, markets rally? Yeah, it wasn't great. Matter of fact, we thought was above what we wanted, 2%. It's actually below 1.5%. But we're not going to post that over the news anywhere. We're just going to kind of hide that over here. And markets will still continue to rally. Thanks. This is no different. Man, hey man, did you check out this auto subprime lender? They're the biggest one in the USA. Watching their stock, man, it looks pretty solid. I think we're going to invest. Well, hold on. Before you do that, did you look at their previous quarters or anything? Oh, yeah, of course. Previous quarters, the numbers look great. All right, well, let me know how that goes. Okay. Oh, wait a minute. Let me just see what this actually fell. High of $12 very recently. As of 15, 16, 17, 18th, and 20th, almost the 21st of July this month. Today's the 25th, so just a few days later, drops down to hit a low of about 1040. So $12, instant drop to $10 and some change. You're talking almost, not quite, but almost a 20% drop. So, actually, yeah, so that's when you call your friend back. Hey, you should talk about the chart and all that stuff, the company. Yeah. You said you were making money. Yeah. Remember when I asked you about the previous quarter? Yeah, you looked into it. Yeah. Why? Did you see what the stock's at today? Well, last time I saw it was like 12 something. No, it's down. It just dropped almost 20%. What? Yeah, it's down to like $10. Oh, and by the way, they're not releasing their quarter 2 numbers because they said that they're looking up methodologies used from one accounting firm to the newer accounting firm, and they think there's going to be some discrepancies, and they said it might even impact previous reporting. So all the profit you thought you made, as your friend, I'm going to advise you, get the F out of there as soon as possible. Oh, and by the way, Lindsey Williams called and said to tell you, if you have anything invested and it's written on a piece of paper, like what you're invested in, it's not going to be worth the paper it's written on when this thing all ends. So while it's still at $10 today, take your losses immediately and get the F out as fast as possible. And whatever little bit you have left after dealing with that, this guy on YouTube, his name's Jason4, I want to punch him in his face sometimes because he keeps screaming about people buying precious metals, like silver coins, yeah, and then store them in your house in a safe. Oh, I'm not going to do that. What if I get broken into? I'll buy some paper silver. Thanks for the advice. Tell J Snip to F off. I'll go buy some paper silver. And then J Snip 4, with his words of wisdom, will punch your mouth loose when it comes. When this day comes, that's what's going to happen. And I hope everybody who've been listening to my videos over all these freaking years, this painfully slow process we've been dealing with, the manipulation of these markets, including silver prices and gold prices, as you've seen recently, we know those days are numbered. What we don't know is when or how soon. From the looks of things happening across the planet right now, from these fake drill shooting to all this crap to everything else, finance, Italy's in trouble, banks, Portugal's now in trouble, banks. I mean, they've always been in trouble. Now it's coming back out again. We need another bailout, second bailout. But I thought you only needed one. You promised us all, the whole world, all you banks needed one and only one. It was going to fix the problem. Breaking news, CNN breaking news, banks unexpectedly had accountant A and accountant B discrepancies and unexpectedly found that their books were cooked. And everything you thought you knew about them was wrong. They're worthless pieces of garbage. But the corporate executives walked away with hundreds of millions in the bonuses and stuff. It reminds me of, I think it was it was Fannie or Freddie Mac, one of those two, I think. Remember? They need a bailout too. Remember that? Those guys? Yeah, they need a bailout too. And the head of the, let me Google that just so I could be really accurate real quick. I think it was Freddie Mac, 100 million CEO. Oh yeah, I don't want to click a CNN link. I can't do that. Let me click IB Times, because even though CNN actually covered it, how much did previous Fannie and Freddie CEOs make? According to a report, House Oversight in 2010, Hedelman received a base salary of $900,000, so he makes almost $1 million, and took home an additional $2.3 million in bonus pay. He stands to make as much as $6 million in 2011. Now, where was the $100 million? Because James Johnson, Fannie Mae CEO, from 91 to 98, earned roughly $100 million in pay over his time there. I'm not talking about that. I'm talking about the recent one. Someone walked away, and on their way out, after being bailed out, made $100 million bucks on their way out. How the hell can you bail an entity out while simultaneously paying a single man anywhere even near $100 million? Because if you didn't get the bailout, you wouldn't get $100 million. Now, would you? Your company would be broken apart, and assets, should any exist, be sold off, and your little 100 cents on the dollar you left with becomes like a few pennies on the dollar. Yeah, he walked away with $3 million. Okay, sure beats $100 million. Anyways, if you just look at how, let me just end this video by saying that I'm going to change subject for just a bit. It kind of goes in line with this, but it's a different subject. For the last, it seemed like 2012 is when things really started picking up. So last 4 years, each year seems to outdo the previous year in stuff happening, whether it's financial, war, terror, anything, all combined as a whole. There is so much crap happening more and more frequently. And again, just look at this year. Man, are we off to the races with the shootings and terror, again, real or fake, whatever. And when I see all that stuff picking up, it's telling me we're getting ready for the climax. And what if the climax is a major, major attack on American soil, and by God, we can't have the elections? All I know is I see things picking up. And things cannot just keep picking up, because sooner or later they happen so fast that there's not possibly a way for them to happen any faster. That's usually what we have the climax of whatever you're talking about or whatever's happening at the time. So I think when Lindsey Williams said the club is really planning on trying to crash the market at the end of this year. I got a sneaky suspicion that it appears to be on like Donkey Kong. Anyway, take care.